Peace. Everybody is talking about AI stocks. Nvidia, Microsoft, Google, Amazon, data centers, GPUs, all of that. But there is a hidden side of the AI boom that most investors are not paying attention to. AI is not just software. AI is a physical infrastructure. Every AI model needs data centers behind it. Those data centers need power. Power creates heat. Heat creates cooling. Cooling can require water. And when that hardware gets old, replaced, or upgraded, it creates electronic waste. So while everybody's chasing the obvious AI names, I'm looking at the companies that solve the problems AI creates. Because if AI is going to keep growing, somebody has to solve the cooling problem, the water problem, and the e-waste problem. And in this episode, I'm breaking down 4 stocks that could benefit from that side of the AI boom. Not the chip stocks everybody already knows about, but the infrastructure names behind the scenes. Let's get to it.
This ain't lean, this espresso off in my cup, I'm sipping. I been up, if I ain't got it, you know I'm on the way to go get it. Ain't gotta flex, ain't gotta talk, they know this shit is different. Whole lot of comments while I talk like, hold up, wait, let me finish my sentence.
So here's the big idea, right? AI is not just software, like I said in the beginning. AI is physical infrastructure. Every chatbot, every AI model, every cloud platform, every AI tool needs data centers behind it. Those data centers need what? Power, cooling, water management, server racks, chips, networking gear, backup systems, and eventually recycling or disposal when that equipment gets replaced. So this is bigger than just buying chip stocks, you know? This is about the full AI infrastructure supply chain. And when the trend gets this big, the opportunity is not always in the obvious stock. Sometimes the better move is finding the companies that solve the bottlenecks. So the reason why this matters to investors is because every major technology boom creates second-order winners. The internet boom did not just create websites. It created demand for servers, networking equipment, telecom infrastructure, cybersecurity, and cloud computing. The electric vehicle boom did not just create car companies. It created demand for lithium, batteries, charging stations, chips, and power infrastructure. So AI is doing the same thing. Yes, AI does need chips, but it also needs the infrastructure around the chips. And that's where this investment thing gets interesting. Because if AI demand keeps growing, the market may start paying more attention to the companies helping AI scale without breaking the power grid, wasting water, or creating mountains of electronic waste. So now that we understand the problem, let's talk about the company's position around the solution. So the 4 stocks that I'm watching that help solve these problems are Vertiv, Ecolab, Xylem, and SMSMY Limited. Each one attacks a different part of the AI infrastructure problem. VRT is the cooling and power infrastructure play. ECL is the water management play. XYL is the water infrastructure play. And SMSMY is the e-waste and hardware lifecycle play. So let's break them down one by one. So the first problem is cooling. AI chips run hot. The more powerful the chips get, the more heat they create. And when data centers get packed with high-performance GPUs, traditional cooling systems may not be enough. That creates demand for better cooling systems, liquid cooling, power management, and thermal infrastructure. So this is where the first stock comes into play. And that first stock is Vertiv. Vertiv is not an AI chip company. It's an AI infrastructure company. They provide cooling systems, power systems, and data infrastructure that help keep high-performing data centers running. And that matters because the more AI grows, the more stress gets put onto data centers. If AI workload keeps increasing, companies are going to need better ways to cool servers, manage power, and keep data centers offline. This makes Vertiv one of the cleaner picks and shovels plays in the AI infrastructure thing. So just to break it down simply, NVIDIA sells the chips. Cloud companies build the data centers. Vertiv helps keep those data centers powered and cooled. So if AI demand keeps growing, Vertiv could benefit from the infrastructure side of the trade. So VRT is probably one of the most direct stocks in this group for the AI data center cooling thing. It is not the cheapest looking name after its AI run, so I would not chase it blindly. But from a theme perspective, VRT belongs on the watch list. Now let's go to the next problem. The second problem is water. A lot of people do not realize this, but data centers can use water for cooling. And as AI demand grows, water usage has become a bigger issue. That matters for 2 reasons. 1, companies want to reduce operating costs. 2, governments and communities may start paying closer attention to how much water data centers use, especially in areas where water is already limited. So if AI data centers need to become more water efficient, that creates opportunity for companies that specialize in water management, treatment, reuse, and efficiency. So, and this brings me to the next two stocks. So the second stock on my list is ECL, Ecolab. Ecolab is a water, hygiene, and sustainability company. For this AI theme, the part that I care about is water management. Data centers need reliable cooling and efficient water use. Ecolab helps companies manage water systems, reduce waste, improve efficiency, and operate more sustainably. So while Ecolab is not an AI company, it could benefit from the pressures on data centers to use less water and operate more efficiently. So to break this down simply, AI needs data centers need cooling, cooling can require water, and Ecolab helps companies manage water use more efficiently. So ECL is not a flashy AI trade. It's more of a steady infrastructure and sustainability play. But that is exactly why it is interesting. If investors start caring more about the environmental cost of AI, Ecolab could become a part of that conversation. Now let's get to the next stock, or the third stock. The third stock is XYL, or Xylem. Xylem is another water infrastructure company. They focus on water technology, water treatment, pumping systems, monitoring, and efficiency solutions. Xylem matters because data centers may need more advanced water systems, closed-loop cooling, treatment, and reuse solutions. If AI keeps expanding into more physical data centers, water and infrastructure becomes more important. That puts Xylem on the watch list. Ecolab is more for water management and operational efficiency, but Xylem is more water infrastructure and technology. Both can fit the AI water efficiency theme, but they are not the same type of company. XYL is a broader water infrastructure play. It's not just about AI, but AI could become another demand driver for that company over time. If you believe water becomes a bigger investment theme over the next decade, XYL is one of the names worth studying. Now let's get to the third problem, and this is probably the problem in the AI boom that almost nobody talks about: electronic waste. AI hardware does not last forever. Servers get upgraded, GPUs get replaced, networking equipment becomes outdated, storage systems get cycled out, and data centers have to refresh their hardware. And the faster that AI moves, the faster some of this equipment may be outdated. That means the AI boom could create a third problem. What happens to all the old equipment? This is where recycling, asset recovery, and data center decommissioning becomes important. That brings me to the fourth stock. The fourth stock is SMSMY, or SIMS Limited. SIMS is not a household name like NVIDIA or Microsoft, but for this thing, that is what makes it interesting. SIMS operates in recycling, metal recovery, and lifecycle services. Through its lifecycle service business, it works around IT asset disposition, e-waste, and data center equipment recovery. That matters because as companies upgrade AI infrastructure, old hardware has to go somewhere. It can be resold, refurbished, recycled, or processed with valuable materials. So if AI speeds up the hardware replacement cycle, companies tied to e-waste and asset recovery could greatly benefit. So to put this in simple terms, AI creates new demand for hardware. New hardware eventually replaces old hardware. Old hardware creates e-waste. SIMS helps process, recover, and recycle and manage that waste. So SMSMY is the most unique name on the list. It's not a pure AI stock. It's not a pure water stock. It's more of a second-order AI sustainability play. But if the market starts paying attention to AI's environmental footprint, SIMS could become one of the companies that's worth watching. So here's how I'll break down the four stocks that I just gave you, right? VRT is the cooling and power infrastructure play. If AI data centers need more advanced cooling and power management, VRT benefits. ECL is the water management play. If data centers need to reduce water usage and improve operational efficiency, Ecolab benefits. XYL is the water infrastructure play. If data centers need better waste systems, treatment, reuse, and monitoring, Xylem benefits. And then we have SMSMY, or SIMS. SIMS is the e-waste and hardware efficiency play. If AI creates more server upgrades, more hardware refreshes, and more electronic waste, SIMS benefits. So they all connect to AI, but just in different ways, you know? Now for traders, here's how I would connect that back to the broader market. The theme is still tied to tech, data centers, and AI infrastructure. So I would watch QQQ first. If QQQ is strong and AI names are leading, the infrastructure names like VRT may get more attention. But if QQQ is weak, yields are rising, or tech is under pressure, these stocks may struggle, even if the long-term theme is strong. So for SPY, I'm watching whether the broader market is risk on or risk off. If SPY is holding support and VIX is calm, the market may be more willing to reward secondary AI plays. But if SPY breaks support and VIX starts rising, I will be careful chasing anything tied to growth or AI. The theme can be strong, but this chart still has to confirm. So before buying any of these names, I will want to check a few things. So first thing I will want to check, is the stock already extended? A good theme does not mean a good entry. So that's the first thing I would check. Number two, I would check, is the revenue actually tied to the theme? I want to see if a company is really benefiting from AI data centers, water efficiency, or e-waste. But I want to see if the company is really benefiting from AI data centers, water efficiency, or e-waste, not just using buzzwords. So number three, is the market rewarding the sector? If data center infrastructure stocks are moving, VRT becomes more interesting. If water infrastructure stocks are moving, ECL and XYL become more interesting. If recycling and circular economic names start getting attention, SMSMY becomes more interesting. So number four, and the fourth question, the last question, is what does the chart look like? For me, I still want structure. I want support, trend, volume, and confirmation. So I'm not just buying because the story sounds good. I actually want to get a good entry and a good buy price, so that way I can make the most money. If I had to rank these based on how directly they connect to the AI sustainability thing, I would say number one, VRT. I would say number two, ECL. Number three, XYL. And number four, SIMS or SMSMY. Now, this does not mean VRT is automatically the best buy. It means VRT has the clearest AI infrastructure connection. The best buy, though, depends on valuation, chart setup, market conditions, and your time horizon. So here's the main takeaway. AI is not just a software revolution. It's an infrastructure revolution. And infrastructure creates bottlenecks. And right now, the biggest bottlenecks are chips, power, cooling, water, and hardware waste. Most investors focus on chip companies, but the next layer of opportunities may be in the companies helping AI scale responsibly. So that's why I'm watching VRT for cooling and power, ECL for waste management, XYL for water infrastructure, and SMSMY for e-waste and hardware lifecycle. The move is not to chase every AI headline. That is not the move. The move is to understand the full supply chain and find where the bottleneck creates the next opportunity. If you got value from this breakdown, go ahead, subscribe to my channel, man. We don't just chase headlines over here. We break down the market, find sectors, watch the stocks, and wait for confirmation. Because the move is not always to trade. Sometimes the move is to prepare. It's Juug The Market, man. Thank y'all for watching. Be sure to like, comment, and subscribe. Peace.